A very good morning, ladies and gentlemen. Welcome to today's conversation. My name is Monica Kamunde, aka Magical. I change people's lives by offering financial advice and financial solutions. As promised in my previous video, today we will be focusing on the money market fund. Money market fund is one of the funds under unit trust. It is actually the most common of the funds and the most easy to execute. Albert Einstein once compared compound interest to the eighth wonder of the world. He actually said that compound interest is the eighth wonder of the world. That is the case because even small amounts invested over a long period of time can bring significant returns over the long period. And that is the wonder that money market brings to us as investors. Compound interest simply means that other than just getting returns on your principal or the capital invested, you also earn an interest on the interest that you've earned already. And so when you give your fund manager your money to invest in a money market fund, they invest that money and it earns a daily yield or return. If you want, you can call it interest. So this daily yield is then reinvested at the end of the month. So at the beginning of the following month, your initial capital is inclusive of the interest that you've accrued in the first month. Maybe I can give a simple example just to illustrate. If, for instance, you're investing 1,000,000 shillings at the beginning of March, and assuming your fund manager is giving you a rate of 12% per annum. So it means if it's 12% per annum, that means you're making 120,000 on the 1,000,000 for the year. That's per annum. So you divide that by 12 and you're able to get the monthly yield, which is around 10,000. So this 10,000, the government requires that you pay a small pay as you earn. And so you deduct that from the interest that you've made during that month. And so it means when you start April, your initial capital will not just be the 1,000,000, it will be 1,000,000 plus the interest that was reinvested from the previous month of March. So that's just a simple illustration, and you can do the illustration with various amounts, be it 100,000 shillings, 50,000 shillings, 10,000 shillings. Like I indicated in my previous video, unit trust is for everybody, from the top to the lowest rank. Someone with as little as 1,000 shillings, 500 shillings can invest in the unit trust. So, due to the importance of accessing the money that you invest in the money market, the fund managers invest your money in short-term instruments or short-term avenues. For instance, they'll invest your money in treasury bills. They will invest in fixed deposits. They will invest, for instance, in cash on call. So all these are very short-term avenues because you can access your money as and when you need it. For instance, the treasury bills, these are government borrowing avenues. So the government borrows money for short-term operations. and this could be as less as 91 days to 364 days. So as you can see, money market invests in avenues that are not long term. Mostly it's 1 year and less than 1 year. So the question is, who can invest in the money market fund? Money market fund becomes a good place to invest for people who are looking at short-term goals. You have a short-term objective, saying in the next 5 months, in the next 1 year, in the next 2 years, I need to do ABCD. Money market is a good place to park your money. It's also a good place for people who want cash flow. I'm looking at business people. Business people want cash flow because you need money for your operations to run smoothly. You need money to pay your employees at the end of the month. You need money to pay your electricity bill. You need money to do all these other things. So money market becomes a good place to put your money and the monthly yield and still be able to run your operations without running out of money. The other person who needs to invest in a money market fund is someone who is looking to build an emergency fund or a kitty that gives you a reservoir for use during bad times. All of you, I believe, at some point you've been faced by an emergency. An emergency could be a thing like, let's say, a hospital bill that you did not expect. Maybe you have the medical cover, but that money or that cover is not adequate enough to cater for that hospital bill. So the money in the money market fund comes in to help you in such a situation. It could also help you in an emergency like loss of income. For people who were there during COVID-19, you saw what happened. Companies closed operations. People lost their jobs. Different sectors were affected differently. And so people who had some emergency funds in money market were able to sail through. By the time the effect of the COVID was reducing, at least they had a soft landing. So the other person, an emergency could be also a delay in payment. It could be that your employer has delayed in paying. The payroll is not out. It could be you've supplied some goods to a certain organization and they've not paid you. So money market fund then comes in at that point and you can use that money. For retirees, people who are retiring, you come out with that lump sum. Money market is a good place to park that money. You park that money and it's able to give you a monthly income that you can actually survive on without having to put your money into risky businesses or activities because also the time factor is of essence. People like students can also use money market to put their pocket money, and that really helps with helping you create a culture of discipline. It disciplines you to keep that coin instead of using it up in things that you might not even account for. So as you can see, money market is actually for almost everyone. If you're a risk-averse kind of an investor, a risk-averse is these people who they don't want to take any risk. They're happy with their 1 shilling being 1 shilling as long as it's safe. Money market is a place for you. You're saying, I have my 50,000, I have my 100,000. I don't care if I get any returns, but I want it to be safe. Money market is a place for you. So for people who are looking at capital protection, protecting your capital, money market is an ideal place for you because there's an element of safety. If you're looking at, for instance, we talked about short-term goals. You're saying in the next 1 year, I want to do a wedding. In the next 6 months, I want to go on holiday. Money market becomes a place to put that money. So ladies and gentlemen, money market fund might not be the longest term solution for your investment, but it's an avenue that can help you accumulate or build enough money for you to do your now bigger projects. So, ladies and gentlemen, I leave you with that. And in our next video or in our next conversation, we will be looking at the equity fund. Thank you so much for listening. Thank you for watching. Thank you for subscribing. Let's keep the conversation going. Have a good afternoon. Thank you.